Very historic week. Meantime, stocks are rallying here on the back of the Fed's rate cut. Our next guest likes industrials and financials here. Fundstrat Global Advisors Head of Research and CNBC contributor Tom Lee joins us on the phone. Sticking with his target of 5,200, Tom, I know you agree the cycle has started and there is a Fed put in place, but it doesn't sound like you're willing at this moment to add a lot more risk.
Good morning, Carl, and thanks for having me. You know, Carl, I've got, I think, two time frames. I think what Steve said about the recalibration is really important because I think investors also need to recalibrate. There are too many that were in the camp of a hard landing coming or the Fed would be too late. And this Fed cut cycle, I think, is setting the stage for markets to be really strong over the next 1 month or next 3 months. But what the stocks do between now and, let's say, the election day, I think is still a lot of uncertainty. And that's the reason why I'm a little hesitant for investors to dive in. But if I was going to advise where to be positioned, Carl, it's exactly what you said. It's cyclicals, which is industrials, financials, and small caps.
Right. With a preference for that over your traditional Mag 7 tech AI build-out trade?
I think tech and Mag 7 still keeps up with the market, and that's why if someone owns it and they have tax implications, I wouldn't sell it. But for all these folks that have been sitting on defensive positions or thinking the Fed cut was going to be too late and the market was going to, equity markets were going to fall, I think those folks have to allocate into cyclical stocks, especially small caps, because they are not only sensitive to the cut in rates because of variable rate debt, but they're going to benefit from the cyclical boost to the economy as mortgages, the cost of mortgages drop, auto loans, credit cards, the lift to the consumer, potential M&A. All these are big tailwinds for small caps.
A tectonic shift in the financial cosmos has just begun. Yesterday, amidst the bustling excitement of Wall Street, the Federal Reserve delivered the long-anticipated news of an interest rate cut. But hold on, that's only part of the story. The real buzz in the stock market centers on Nvidia. Yes, our revered titan in the AI chip arena. Enchanting investors globally, Nvidia's shares surged with an extra zest following this announcement. Without leaking all the juicy details just yet, it's crucial to mention that this is not just about cheaper capital, but also about what Nvidia CEO Jensen Huang had to say at Salesforce's Dreamforce event, sharing the stage with none other than Salesforce CEO Marc Benioff. Spoiler alert, the AI industry is evolving faster than we imagined, and Nvidia is at the helm of this industrial revolution. Welcome back, everyone, to Investocracy.
I guess then the risk to this, Tom, is that inflation comes back, right? If you're talking about this big cyclical recovery because of what the Fed's doing.
That's true. But I think one thing investors have to distinguish is that real growth, like GDP growth, doesn't mean inflation pressures, because inflation is, a mismatch of supply and demand. And I think there is a lot of excess supply potentially coming. For instance, housing could have a supply response. And if you look at the two biggest drivers for inflation for the past 8 quarters, it's been shelter and rent rolls and auto insurance. And auto insurance, I think these insurers have reached sufficiency, so you're not seeing the premium increases anymore. So unless the rest of the CPI basket accelerates, inflation is actually falling pretty sharply.
Hey, Tom, on the labor market, we're going to get 2 prints before the November meeting. Some of these doves are arguing that labor is going to force a faster pace of cuts because historically they argue the change in monetary policy doesn't get felt in the labor market for 4 quarters, and the peak impact is not for 8 quarters. I wonder if you agree.
I mean, I don't think there's anything wrong with people looking at the history of labor markets, especially as people know, as labor markets slow, it has a cycle of its own. The one thing that I think we have to keep in the back of our minds is that CEOs have been cautious for the last 2.5 years because the Fed telegraphed a tightening cycle to fight inflation. So I think that the fact that rates and now we're in an easing cycle means that companies are going to actually start doing expansion. So I think the labor market and the Fed is mentally knocking down these monthly numbers. I think tailwinds are emerging for labor markets to actually strengthen.
The stock market. where fortunes are made and lost in the blink of an eye. It's like the world's most intense reality show, and right now, Nvidia is its shining star. So, what's causing this investor frenzy? The Federal Reserve's rate cut naturally lifts stocks by making borrowing cheaper for businesses, thereby driving growth. But the icing on the cake came from the effervescent remarks made by Nvidia's dynamic CEO Jensen Huang at the Dreamforce event with a flair only few possess. Huang shared his vision for an enterprise AI era, compelling investors to look beyond tools to skills. He boldly declared, "We're going to bring a level of automation capability that the world's never seen." And judging by Nvidia's 140% surge year-to-date, it seems investors are truly buying into this vision. Consider this. Nvidia shares had already climbed by 5.3% by 11:40 a.m. ET, immediately after the Fed's announcement. Then, the Dreamforce revelations added rocket fuel to the stock. Huang's conversation with Marc Benioff, another tech luminary, was a pivotal moment. The excitement hit a fever pitch when Huang proclaimed this as the dawn of a new industrial revolution. The room buzzed with the promise of autonomous AI-powered agents, a notion that takes us from dreaming about AI to witnessing its integration into the very fabric of enterprise operations. One can't help but chuckle at the unpredictability of the stock market. Even the best financial analysts didn't see this coming. Who knew that attending a tech conference could sway stock prices as much as federal decisions? Yet, here we are. Huang's fervor is contagious. It's almost as if he's single-handedly engineering this exponential growth trajectory. Data reveals that Nvidia has shown impressive resilience and growth, dwarfing its competitors and making it the undeniable leader in AI chips. With AI becoming indispensable in various sectors, healthcare, automotive, and finance, to name a few, investors are seeing Nvidia as a golden ticket. But before we go any further, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates.
Next guest, Dan Ives, Managing Director, Equity Research, Wedbush Securities. Dan, it is so great to talk to you. You know, we always love having you on. I saw you out at a conference recently. I saw pictures of you, I should say. I wasn't there. But let's talk, and you look like you were having a great time. But let's talk about the rate cut, the 50 basis point. A lot of people were not expecting that. I'll confess, myself included. Were you expecting 50 bips or were you in the 25 camp?
I mean, our view is this was going to be the Fed ripping the Band-Aid off. I mean, you know, in terms of cutting 50 bips, I think was a huge first step to what's going to be just a massive dovish stance over the next 12 to 18 months. And for tech investors, that's a risk-on trade. It's bullish. That's why today a lot of those bears that have been out for the last month after, you know, a few years in hibernation mode, they're going back into those caves this morning.
It certainly seems that way. I mean, you've got markets hitting new all-time highs today. We're looking at the S&P 500 continuing to advance, NASDAQ 100 really rallying today. How does this impact the AI trade in your view through the balance of the year?
Oh, I think tech rips higher. I mean, rest of the year. Look, first off, you have $1 trillion of AI-driven CapEx coming to tech over the next, call it, 3 years. And that fundamental story, I mean, we just got back from Asia, and that's accelerating, not decelerating. So I think it shows demand's outstripping supply 15 to 1. Tech AI names, I believe, rip higher into year-end. And I think going 2025, now you're going to see more second, third derivatives of that trade, and even small caps starting to participate. Now, I continue to believe it's 9 p.m. in the AI party that goes to 4 a.m.
Huang's earlier remarks after meeting tech behemoths and the Biden administration set the stage for this excitement. A new industrial revolution is beginning, he stated matter-of-factly, emphasizing that this new era will be defined by AI skills rather than mere tools. Investors reacted with palpable excitement, signaling their growing confidence in Nvidia's future. Tweets from tech influencers, such as at Tech Guru Lisa, aptly encapsulate this sentiment. Nvidia is not just riding the AI wave, they are creating the wave. Take, for example, the broader implications of Nvidia's AI advancements. Enterprises are looking at seismic shifts in business operations, from predictive analytics in healthcare to self-driving cars in the automotive industry. Financial sectors are also leveraging AI for high-frequency trading and fraud detection. Huang's assertion that Nvidia is leading this technological revolution showcases their integral role across multiple industries. By embedding AI into core operations, Nvidia is essentially rewriting the playbook for how industries function, adding layers of efficiency, automation, and, ultimately, profitability. The juxtaposition of the Federal Reserve's interest rate cut and Huang's AI vision creates an intriguing narrative. On one hand, we have economic policy making capital cheaper, facilitating business expansion. On the other, we have a visionary leader outlining a roadmap that could redefine technological landscapes. These combined forces are setting the stage for Nvidia's sustained growth. Consider this illustrative example. If Nvidia's performance this year is visualized as a trajectory in a space race, then we are no longer talking moon landing. We are Mars-bound. This year's 140% leap isn't just statistically significant. It's a testament to the firm belief investors place in Huang's leadership and vision. The sentiment is further magnified by the company's global reach and diverse portfolio that spans across various high-impact sectors. Nvidia isn't just navigating the AI landscape, it's paving the way for others to follow. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
So it goes to 4 a.m. We've heard the analogy before in terms of innings for the AI trade. Are we still in the early innings from your view? Because you had started to see some commentary about, okay, things are maturing. Are we going to start to see the second case, the use case for AI? And that's kind of what investors were looking to hear more of. Okay, what's the use case now?
Yeah, and that's what, look at the Messi of AI Palantir. I mean, that's front and center in terms of the use cases. Use cases are exploding today. I mean, we have 4x the amount of use cases than we did going back, call it 4 or 5 months ago. That's why you see in the strength in ServiceNow, Oracle. I believe ultimately you'll see strength in Salesforce and a lot of other software names. Because now the use case, the software phase of AI is starting to play out.
Let's talk a little bit about NVIDIA. The shares are higher, as I guess can be expected today, especially when you see this big risk on trade. What does that tell you about where NVIDIA stands and, kind of some of the naysayers recently?
Yeah, the haters are going to hate. But I mean, we just got back from Asia and demand continues to accelerate. And like I said, demand's outstripping supply 15-1. You start to look at Godfather of AI, Jensen NVIDIA. This is just the start of the AI revolution. We believe a year from now, NVIDIA is a $4 trillion market cap.
The convergence of a favorable economic environment and visionary leadership puts Nvidia in a unique position for stellar growth. This stock is no longer just a player in the market. It's becoming a defining performance indicator. The current state of Nvidia sees it well-positioned, continuously climbing with no signs of slowing down. Analysts forecast robust growth, suggesting that Nvidia could very well be the crown jewel amidst tech stocks in the coming era. Now, of course, investing always comes with its share of risks, but with Nvidia, the odds are increasingly in favor of those willing to ride the AI wave. So, what do you think? Does Nvidia's record-breaking rise and futuristic outlook entice you? Could this be the golden nugget in your investment portfolio? The dialogue continues as the stock market wheel turns, bringing with it fresh stories of triumph and turbulence. Let us know your thoughts. And finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there!